Good afternoon, guys. This is Chris Robinson, Robinson Ag Marketing. I know a lot of you guys out there sitting in the tractor planting, so I'll keep this brief and to the point, as brief and to the point as I possibly can. A good day in the grains, no two ways about it. November beans hit 1170. The high back on March 12th was 1174 and change. So we were back up to that 2-year high in November beans. We're going back to May of 2024, guys. So I hope we get $12. I hope we get 12.40. But 11.70 when we started the year at 10.50, and a year ago, April, we were down at 9.92. Believe it or not, go back and look at April of 2025. So to be up here at 11.66 and a half is where we settled, up 8.75 cents. It is a gift. It is also a mulligan. What does that mean? Well, on March 12th, we hit 11.74, and then a couple days later, we were trading 11.18, and people were like, "That's it, it's over," sticking a fork in it. So to go from 11.18 back up to 11.70, I think that's a good thing. And make sure you please reward it. Making a cash sale is not getting bearish, but it's a long marketing year, and nothing beats a good cash sale. That's a lot of revenue to turn your nose up against. So I would absolutely positively reward this rally. If you had $11 puts, I'd roll them up to 11 or 11.30, possibly 11.40. And again, back on in the middle of March, an $11 put looked pretty doggone good when we were trading at 11.18. So don't call me up and say, "Oh, that $11 put didn't do anything." It absolutely positively kept you from making a bad sale at 11.18. New crop corn back to 481 and 3/4, hit 483. Are we going to hit 498 and a half? I don't know. Beans may drag us up. If beans can keep this thing up, we really have to settle above 1175 to really solidify the breakout. Today is Tuesday, so where we are by Friday, if we can settle above 1175 for Friday, then yeah, it's game on, because that means there's something out there that we don't see going on, giving us these higher prices. Why are we up here? Our beans are 75 cents more expensive than South America's. Why are we up here? We're well supplied. The world is well supplied. We just had a huge record crop in South America. So why are we sitting up here at 11.66? Right? So I don't have the answer. All I do though is this: if I'm long this stuff, sometimes the least you know, the better. What you want to do is ride with it, stay with it, reward it, protect it. So I'll say that again: ride with it, stay with it, reward it, protect it. I certainly do hope we get to 12.40, which is the old contract high for new crop beans. I certainly do hope that D's corn gets to 5.12, which is the contract high. I'm hopeful of that. But for me to sit here and say, "Oh, don't worry about it. You don't need any protection. Don't make any cash sales. Just sit back and step outside and smoke a cigarette." No, I don't think that that's a good idea. So these markets turn too fast, too quickly. And what's the big risk? We've got the May meeting between President Xi and President Trump. What's going to happen at that meeting? Is China going to continue to buy our beans at 75 cents higher than South America's? That's going to be the big question. A good recovery across all the markets. July wheat up 6.75 cents at 6.12. Kansas City wheat back up to 6.55. Kansas City wheat has been interesting. We hit 6.63, which was a 15-month high, I believe, give or take. We've stutter stopped there about 3 times, 6.60. If Kansas City July can get above 6.60, settle above 6.60, again, same thing. It doesn't make any sense because we are well supplied, but if the market wants to go, let the market go. This could be, there's a couple things driving this. It could be investment community that just is concerned about inflation. It could be the investment community is concerned that the supply shock with crude oil is not going to go away quickly. If it doesn't, then we have elevated. We have months and months of elevated crude oil prices that flows through everything else. So that could be what is driving us. At any rate, what you want to do is take advantage of it, use it. So please get after it, get some marketing done. Making a sale or buying a put is not getting bearish. Okay, and the perfect example, I put this in my afternoon note. Maybe some of you guys had 14 cents invested into $11 puts that are going off here. We had them on for a couple months, 7 cents a month. We had $11 covered. When we were down at 11.18, that looked pretty darn good. Let me tell you. Now, flip side, if you had panicked the day we hit 11.18 and sold futures against your production because you were worried about it going below $11, well, guess what? You capped your profits at 11.18. We're trading at 11.70, and you've left all that money on the table, and you've made margin calls. So buying a put is the best solution for a producer. No matter any time you hedge, you're always looking at some sort of a potential loss, unless you sell the top. So I'd rather lose 14 cents and gain the 60 in the futures market than sell futures and leave 65 cents on the table with margin calls. It's just a different strategy. That's why it works. People are always like, I don't like puts. I don't like puts. Let me tell you something. If you had $11 puts on back when we traded 11.18 and we got back to 10.50, you would have liked your puts. But nobody knew we were going to come back here to 11.70. So, and again, is this the top? Boy, I hope not, because it's a lot more fun to protect $12 and $13 beans than it is to protect $11 beans. No two ways about it. So a great day in the markets. Real quick, East corn up 2.25 cents at 481 3/4. November beans up 8 3/4 cents at 1166.5. December wheat up 7 cents, 644.5. That is Chicago. KCDs up 9 cents at 683.5. We're going to get a $7 print out there. It looks like in East KC. That could be a pretty impressive rebound from where we were. Remember, we just came off 5-year lows in the week, guys. So this is a great rally. Let's use it. In the protein complex, right? Fat cattle, June fat cattle down 250 at 243.5. No word on if the border is going to open up. However, we did come down and make the lowest trade we've had since April 2nd. So a 3-week low correction. We did have 3 days in a row, but we couldn't get above 252. So now everybody that has a time machine, you can go back and sell it at 252 because now we know that's the triple top for now. Is there more downside possibility to go? Yeah. I would watch 240 tomorrow in June fats. May feeders went down again and retested that 357.5 level today. At one point, it looked like we were going to go. We whipsaw between at 362. It was a pretty vicious trade, but we kind of finished the day right down at the 50% retracement of the last rally, the rally that started at 336.5 on March 12th on that dip. And we turned around and screamed, and we hit 377.5. This 358.5. Very big level. Is there more damage to be done? We'll know. We got Tuesday, Wednesday, Thursday to get through. We've seen this time and time before. Market corrects, and then a couple days later, it screams higher. I don't expect this to be any time differently. Nothing's really changed out there. We have not gotten any news about the border being open yet. And lastly, June hogs. A really good gap and go in June hogs today. For anybody that follows my letter, you know that when we hit 100.175 in June hogs, that was a big retracement. That was a 62% retracement of the rally that started on November 24th and peaked out, up at 112. So, is it just a rally in a bear market now? Have we rolled over? I don't know. But if you are selling animals, or if you just sold animals in the last week or two, there's no time like the present. If you think it's possibly that we go back to 110 or 112, you can still get some very cheap calls out there to re-own animals that you sold. So that's it, guys. In a nutshell, as I'm talking to you, the stock market is basically hanging in there. It's down 200 points. The S&P 500 continues to be above 7,000, trading at 71.20, and crude oil hangs in there at 92. It's almost like the market is just embracing the fact that we're possibly going to have, elevated crude prices for a while here. And again, the driver today, there's no real fundamental reason why beans should be up here, given the supply and demand dynamics that are out there right now that we know about. So either there's something going on we don't know that has not yet hit the news wires, or It's just the investment community that's pouring money into commodities because they're concerned about inflation. All right, we'll be back at it tomorrow. This is Chris Robinson. If you're not getting my letter, robinsonagmarketing.com. Give me a call, 312 638 8868. Have a great day. Thank you for your time.